Hello traders, in this video, I will be sharing with you a groundbreaking strategy that utilizes free Tradingview indicators, which is made of 3 powerful indicators. In the Indicators search tab, we're going to look for a powerful tool called the ADX-MACD confluence. This unique indicator combines the strengths of the ADX, Average Directional Index, and MACD, Moving Average Convergence Divergence, to assist in predicting stock movements. By analyzing the confluence of these 2 indicators, it generates reliable buy and sell signals, making it an invaluable tool for technical analysis. Let's explore how this indicator can supercharge your trading strategy. Before we dive into the strategy, let's optimize the settings of the ADX-MACD confluence indicator. The first parameter we encounter is the ADX length. This parameter plays a crucial role in determining the sensitivity of the Average Directional Index, ADX, which measures the strength of a trend. By adjusting the ADX length, we can control how much historical price data is considered. Increasing the length takes into account a longer period of price data, providing a broader perspective on the trend's strength. Conversely, decreasing the length focuses more on recent price action, offering a more responsive and timely analysis. The default setting for the ADX length parameter is typically 14. However, for this specific strategy, we need to make a slight adjustment and increase it to 15. By increasing the ADX length to 15, we can ensure that we consider a slightly longer period of price data, providing a more comprehensive view of the trend's strength. Moving on to the second parameter, we have the ADX smoothing parameter. This parameter enables us to apply a smoothing factor to the ADX calculation, influencing the smoothness or responsiveness of the ADX line. By adjusting the ADX smoothing value, we can achieve different effects. Increasing the value results in a smoother ADX line, which helps reduce short-term fluctuations and provides a more stable trend indication. On the other hand, decreasing the value makes the ADX line more responsive to immediate changes, allowing us to capture short-term trends and fluctuations. By default, the ADX smoothing parameter is set to 10, which works well for stocks and Forex. However, when it comes to crypto trading, I personally prefer to increase the ADX smoothing value to 12. This adjustment helps to smoothen out the ADX line and filter out some of the inherent volatility in the cryptocurrency market, providing a more reliable trend analysis. Now, let's discuss the third parameter, which is the MACD source parameter. This parameter allows us to select the data source used for the Moving Average Convergence Divergence, MACD calculation. By default, the MACD source parameter is set to use the closing price. This means that the MACD calculation is based on the closing prices of the asset. However, you have the flexibility to experiment with different options such as open, high, low, or even other custom price components. For our strategy, we will stick with the default option and use the closing prices. The closing price is a widely used and reliable data point for MACD analysis. It provides a comprehensive view of the asset's price action and is suitable for most trading scenarios. Next, let's discuss the MACD fast length parameter. This parameter determines the number of periods used to calculate the fast line of the MACD. Increasing the value smoothens the line, while decreasing it enhances its sensitivity to immediate price changes. For our strategy, the default value of 12 works well, so we'll keep it unchanged. Moving on to the MACD slow length parameter. It determines the number of periods for the slow line of the MACD, impacting its responsiveness to longer-term trends. We'll keep the default value of 26 unchanged as it works well for our strategy. Lastly, we have the MACD signal length parameter. It determines the number of periods used to calculate the signal line of the MACD. Increasing this parameter to 10 will smoothen the signal line, providing a more stable indicator. Decreasing it enhances the signal line's reactivity to short-term changes. For our strategy, we will increase the MACD signal length to 10 as it aligns well with our approach and enhances the stability of the indicator. Before we move on to the next indicator, let's explore how we can utilize these signals to execute highly profitable trades. The signals provided by this indicator are exceptionally accurate in capturing short-term movements, making it particularly valuable for scalp traders. When opening a long trade based on the indicator's signal, it's crucial to place your stop loss at the latest swing low. This helps protect your position in case of any sudden price reversals. Additionally, it's recommended to aim for a risk-reward ratio of at least 2. This means that your potential profit target should be at least 2 times the size of your initial risk or stop loss. Despite the high accuracy of this indicator, it's important to note that relying on a single indicator alone may not be sufficient for successful trading. To complement our strategy and ensure we consider the long-term trend, I've discovered another remarkable indicator: the super trended moving averages. By the way, if you are looking forward to receive advanced trading video and strategy and stay ahead of the market, subscribe to my YouTube channel and turn notification bell icon. Let's head back to the Indicators search tab and look for the super trended moving averages. The super trended moving average indicator enhances the traditional super trend by combining a 100-period exponential moving average (EMA) with a 0.5 average true range ATR multiplier. It provides a clear view of the ongoing trend and identifies significant support and resistance levels. With the inclusion of the 100-period EMA and ATR multiplier, this indicator improves our understanding of the market dynamics, enabling us to make well-informed trading decisions. Now that we have added the super trended moving average indicator to our arsenal, let's discuss the settings that we need to optimize for our trading strategy. The first parameter to focus on is the moving average type. It allows you to choose from various types such as simple moving average, SMA, exponential moving average, EMA, and weighted moving average, WMA. For our strategy, we will select WMA as it works best in capturing long-term trends. The next parameter is the moving average length. It determines the number of periods used in the moving average calculation. Increasing the length smooths the moving average, while decreasing it enhances its responsiveness to recent price changes. The default value of 100 works well for Forex and stocks, but for our crypto trading strategy, we will decrease it to 95. Next, let's discuss the ATR period parameter. This parameter determines the number of periods used to calculate the average true range, ATR, which measures the volatility of an asset. Adjusting this parameter enables you to customize the ATR calculation based on your desired time frame and trading style. The default value of 10 is commonly used and yields a dependable indicator of volatility. However, through experimentation, we have found that decreasing the ATR period to 8 can enhance the precision of the indicator even further. Lastly, let's discuss the ATR multiplier parameter. This parameter determines the multiplier applied to the ATR value, which helps define the distance between the moving average and the support resistance levels. Adjusting this parameter allows you to fine-tune the sensitivity of the indicator to price movements. The default value of 0.5 works best on many assets and has proven to provide the best results for our strategy. Now that we have our trading setup optimized for both scalp and swing trades, we're ready to make the most out of market movements. In the end, I'll introduce another incredible indicator that will undoubtedly blow your mind. But before we get to that, let me show you how you can effectively utilize these indicators to maximize your trading opportunities. We'll utilize the super trend indicator to detect long-term trading opportunities. Whenever it turns green, we'll open a long trade and hold it until it turns red. For short-term trades, we'll rely on the ADX-MACD confluence indicator, aiming for a risk-reward ratio of 1.5. To filter out false signals, we'll use the super trend indicator. If it's green, we'll ignore sell signals. If it's red, we'll ignore buy signals. And finally, let me present to you one of the most advanced indicators I've come across on Tradingview. Let's head over to the Indicators tab and search for the Range Sentiment Profile. This powerful tool will provide valuable insights into market sentiment within specific price ranges. Let's optimize the settings of this indicator. In the Settings tab, you'll find the length parameter as the first parameter. The length parameter determines the number of most recent bars used for calculating the indicator. Adjusting this parameter allows you to control the time period over which the indicator analyzes price data. By fine-tuning this parameter, we can customize the indicator's analysis to suit our trading style and preferences. To optimize our strategy, let's increase the length parameter to 100. This adjustment enhances our analysis of market sentiment by considering a larger number of recent bars. Next, let's discuss the ROSE parameter. This parameter determines the number of price areas into which the price range is divided. Adjusting the ROSE parameter allows you to customize the granularity of the analysis. Increasing the number of rows provides a more detailed view of the price range, while decreasing the number of rows offers a broader perspective. By fine-tuning this parameter, we can strike a balance between detail and overview, aligning the analysis with our trading objectives. For our strategy, we will keep the ROSE parameter unchanged. Returning to the chart, let's utilize the range sentiment profile indicator to improve our strategy. It provides market sentiment values, indicating bullish and bearish sentiments at different price levels. These values help identify relevant support and resistance levels. Pay attention to the rectangle displayed by the indicator. A blue rectangle signifies an overall bullish sentiment, while an orange rectangle indicates a bearish sentiment. This information is particularly valuable for short-term trades, assisting in identifying potential reversals or shorting opportunities. Incorporating the range sentiment profile indicator into our strategy enhances our understanding of market sentiments and optimizes our trading approach. And that wraps up our video, folks. I trust you found it entertaining and informative. If you found the content valuable, we kindly ask you to express your support by hitting the like button and subscribing to our channel. By subscribing, you'll receive regular updates on the most lucrative trading strategies. We appreciate your time and viewership. Until we meet again, stay well and goodbye. Thanks for watching our video.